Hello, good morning and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly, your queries during the course of the show. So guys, keep commenting on our live feed and we'll have your queries addressed by our technical analyst on the show. Before bringing him on board, let's see what the global handover looks like. As the sell-off in the tech stocks continued, Wall Street saw a sharp fall. Nasdaq hit a fresh 52-week low yesterday. And taking cues from Wall Street, European stocks also closed lower on Tuesday because market sentiment continues to be rattled by interest rates, inflation, slowing growth, and of course the ongoing Russia-Ukraine conflict. Shares across Asia too are in the red right now. SGX Nifty indicates a negative start for the Indian markets as well. As far as individual stocks are concerned, on the earnings front, we have HUL and Bajaj Auto all set to deliver their Q4 report card. Insurance stocks very much will be in focus closer to the LIC IPO launch, and we put the spotlight on footwear stocks and the ongoing campus activewear public offer. Let's welcome on board our guests for the show. First, we put the spotlight on what's trending, and that is the footwear segment. Bharat Jinani joins us from MC Pro. Bharat, hi, thanks for joining us. Before we talk about individual footwear companies and how they're likely to be, performing, let's talk about the campus IPOs. What are the big USPs that it has, and what is it that MC Pro is, sort of recommending investors? Is it a subscribe or an avoid?
Yeah. Good morning to the viewers. Campus, as we know, it was formerly selling the shoes under the Action brand, so it has a very good brand image. And the main USP of the company is that it caters to the sports and athleisure segment, and it has carved out a unique niche for itself. So it sells the products with an average selling price of 700 rupees. Whereas if we see the MNC players with the likes of Nike, Adidas and Reebok, they sell in the 2500 plus range. So basically it has carved out a strong niche for itself with the price positioning, and the quality is also very good for the Action brand. It has actually led to it being the market leader in the sports and athleisure segment. So it has a market share of about 17% in the organized space. So it has become actually the largest player in the sports and athleisure category. Another point that we would like to highlight about the company is that it has a huge success in the online space. So basically, which has helped it to kind of get into urban and metro areas. So basically, the share of the online was about 3% in FY19, but now it has come up to 32% in the last 9 months. So basically, the online contribution is the highest in the industry. The likes of Relaxo or Bata or a Metro brand, if we were to compare it with the listed players, their online contribution is in single digits. But the company Campus has actually gone ahead and good success in the online space has led to the market of the contribution coming to 32%. Yeah.
So does that mean? Bharat, you guys are giving it a thumbs up as far as the offer is concerned?
Yeah. So if we see the financial comparison, basically the growth prospects of Campus Activewear has been very good. Historically, it has outgrown the average of the listed players. And if we see the particularly the online space, as I earlier pointed out, has led to a good growth. If we see the financial comparison, the profitability is in line with the average of the listed players, but the company has good return ratios. And also the earnings growth because of the good revenue growth has been good. So as far as if we see the valuation, it has been it's a slight discount to the average listed players, whereas having a good growth prospects and a better return ratio. So we have given a subscribe rating to this one.
Okay, just very quickly then, if we look at other listed footwear existing companies, whether it's Bata, Relaxo, Metro brands, Khadims, etc., what we know so far is that in Q3 their sales saw a fabulous recovery. They're back to pre-COVID levels. Q4 is also likely to be, probably ended on a positive note and a strong note rather for these companies. they're expanding their capacities. They're also looking at retail expansion. But any of these names that specially stands out when it comes to footwear players in the listed space that you would like to sort of bet on and that MC Pro is optimistic about?
Yeah. So among the listed players, obviously, as you earlier pointed out, rightly pointed out that the demand has been good after the opening up. The schools,
Yeah.
colleges, even the offices have opened up. So the demand is coming back very strong. Q3 there was a growth above the pre-COVID levels already. They have crossed, and in Q4 we expect even better performance. So among the listed space, we prefer in the pecking order. We like Relaxo would be the prime pick. So basically, it's expanding the capacity at the Rajasthan plant by about 20% or so. Then in the pecking order comes the Metro Brands, because Metro Brands is going very good on the store expansion. They're basically planning to increase the store count by 40 to 45% over the next 3 years. And they have a host of international brands. Crocs, they have been a very huge success. And they have also recently signed an agreement with UK-based FitFlop to exclusively sell their products for the Indian market. We also like Bata, but that would be the last in our pecking order. The company is expanding the reach in tier 2 and tier 3 towns.
Okay, guys, so there you have it. MC Pro's top favorites from the footwear space in that order. First is Relaxo, then comes Metro Brands, and then comes Bata India. Bharat, pleasure chatting with you as always. Thanks for joining in and for spotting the big trends in the footwear space and, of course, helping our viewers out on whether or not they should look at Campus Activewear IPO actively. Okay, let's shift gears and talk technicals. Guys, start sending us your queries because Ruchit Jain is here from 5paisa.com. Ruchit, hi, thank you for joining in.
Hi, very good morning, Karuni.
You know, I'll dive right into individual stocks because HUL definitely, is the signature of all eyes. There's a lot of traction coming in even on our live feed as far as HUL is concerned. So today is the Q for earnings. What we expect from the report card is weak volumes, weak profitability, given what's happening in terms of demand and what's happening in terms of raw material prices. But in terms of technicals, Ruchit, do you think one should look at trading or buying this counter ahead of earnings?
So, Karuna, if you look within the FMCG space, I think last few months we have seen a significant underperformance from HUL, where a lower top, low bottom structure on the daily as well as weekly charts can be seen. Now, last couple of weeks we have seen some pullback move, but every pullback move recently has been extended up to its 200-day exponential moving average, from where we have seen selling pressure again. So unless we see a breakout above its 200-day moving average, the broader trend for HUL still continues to remain down. So I would say that one should not be in a hurry to buy this stock at current levels. I think better to wait for a breakout above that. Now that 200 DMA is placed somewhere around 2260, 2270. So we may see some pullback move more towards that 2250, 2260. But frankly, it won't be a change of the trend. We would see some selling pressure again at high levels, and unless the stock surpasses this resistance, I think one should stay away from this. In case if existing long positions are there, then if it's from a long-term perspective, then I think one can continue to hold on because the price-wise correction seems to be already have been done. So we are expecting now a time-wise correction going ahead. But from a short-term perspective, there are no positive stakes on the charts, at least on short-term pictures, till the stock is trading up below its 200 DMA.
Ruchit, any name in the FMCG basket that's looking good right now technically? Because yes, fundamentals, especially the macros, looking quite weak right now when it comes to, commodity prices, raw material prices, demand scenario, etc. But any of these FMCG names which one can look at amid all this uncertainty?
If you look at last few months, then I think clearly the change of trend has been seen in ITC within the FMCG basket. Other from that, if you look at other stocks, whether it be Dabur, HUL or Marico, we have not seen any price volume action wherein the price up moves have been supported by higher volumes. But in case of ITC, after a long underperformance, finally the stock has seen a price up move supported by higher volumes. On a longer term chart also, there's a good breakout have been seen recently when the stock surpassed that level of 240. So I think on any declines along with the market, now you would see the strength coming from ITC in case if this space as a defensive has to do well in this uncertain market. So I think if one has to take any stock from the FMCG basket, then one should prefer ITC over HUL or any other counters. Even at current levels of 258, if we get any dip towards that 250 to 45 range, that should be a good range to accumulate this stock, keeping a stop loss below 230. And over next 2 to 3 months, one can expect targets around 280, 285 in ITC.
Okay. When it comes to demand and when it comes to raw material cost escalation, even the auto space is equally hit. And Bajaj Auto, again, poised to set a weak set of numbers. On the technicals, I mean, if we look at the price move, in the last 1 week, yes, there has been some good momentum there. Will it last going into the earnings and beyond?
So Karunya, when the markets are falling since last few days, I think auto space somewhere has seen a relative outperformance where there has been no price correction along with the no correction in the broader markets. So I think when you see some relative outperformance in the falling market, those stocks tend to show lesser price-wise correction when the markets correct. So we are not expecting any significant price-wise correction in the Bajaj Auto. In case if the markets correct, I think we should see some correction maybe towards this 3700, 3650 mark, but we are not expecting much more lower levels than this. So one can keep a buy on dip approach in Bajaj Auto, obviously not from a very short term perspective, but if one is looking from at least 3 to 4 months perspective, then around 3650 if the stock comes, then that should be a good support level where the risk reward ratio would become again favorable. So wait for a dip towards 3650 where you can take some contra calls in Bajaj Auto.
Okay. Richard, lots of queries coming in as well for you. So let's get started with our viewer interaction as well. So the first question that I want to address, it's from Mrs. Srinivas Rao. He wants to know about Mindtree and L&T. The merger that is likely to happen is all set to happen. What is the view on the stock prices and what should one do right now?
Overall IT space somewhere has been in a corrective phase since last few weeks, and if I look at the Nifty IT index, then it seems that the correction is not over yet. So we believe that although the major part of the correction is behind, but there are no signs of reversal of the resumption of the uptrend in most of the IT names. So I think even if you look at the Mindtree, then 3700, 3750 is a crucial resistance for the stock. And the next leg of correction could drag the stock back towards that 3650, 3670 mark. So as of now, there are no positive signs. I would wait for some corrections or maybe signs of reversals wherein the price up move start kicking in with rising volumes. So I think it's better to wait for some clarity. You should not mind buying it a bit expensive, but at least there should be a confirmation of for the reversal of the trend.
Okay. The next question is coming in from Anandita Singh Rathore. She wants your view on HDFC. I think it's HDFC Limited because she's not mentioned the word bank. HDFC Limited and Infosys. Can you talk to us about whether or not you like any of these counters?
Well, as HDFC, if we look at recent corporate action which was announced, post that we saw 1 day of gap up, but there was no follow-up move and a decent selling pressure was seen. And usually whenever you see such gap ups, based on the news, the follow-up move is very important. And if there is no follow-up move, there could be a good liquidation which we have seen in last few trading sessions. So one should not expect immediate outperformance from HDFC going ahead. I think there could be some more price-wise correction or some more pain left in the short term where the stock could correct towards 2100, 2150 mark. So wait for some more correction. Don't be in a hurry to do bottom fishing if you are a short-term trader. Of course, if you are looking from a very long-term perspective, then the long-term charts are still positive, and this could be a corrective phase within an uptrend. But I think the risk reward ratio would become favorable if the stock corrects towards the 2100 or even below that. So wait for some correction in HDFC Limited. Infosys, yes, as I said about the IT space, that the IT space could be in a corrective phase which could continue for some more time. So on Infosys, 1480 to 1500 would be the range which I would watch out for to take some contra calls. So of course this remains a buy on dip.
Yeah.
The price-wise correction, major of the price-wise correction has been done. Around 1500, if the stock gets a dip, then you can take a contra call and look to add positions over there.
Okay. The next query is coming in on Adani Group stocks. Yash wants to ask if any of the Adani Group stocks look good right now. And we've seen a good uptick come by, whether it's Adani Port, Adani Green, Adani Enterprises, all of them, especially just yesterday. Very solid action seen on all of these counters. Any of these that you like?
No doubt this group has shown a decent outperformance compared to broader markets, and the way the stocks have rallied along with the high volumes, I think the outperformance could continue. There could be some knee-jerk reactions, if the market corrects, because the momentum readings are in overbought zone post the recent run-up. But on declines, I think Adani Ports would be the one stock which you should watch out for in case if you're looking to buy any of the stocks from this Adani Group. Well, technically, the stock has given a flag breakout pattern 2 days ago, and post that we have seen a price up move, follow-up move supported by very good volumes. And the target projection as per that pattern is coming somewhere around 1050. So look for some dip today. Maybe if the market corrects, the stock should be available a good range to buy the stock. So Adani Ports would be the one we should which you can keep in mind on declines.
Okay, all right. The next stock that we would like to address is HDFC Life. Rahul Kanodia has written to us, what about HDFC Life, as the LIC IPO is coming up next month? In fact, the entire insurance pack as well, definitely will be in focus. That behemoth IPO that everybody has been waiting for several years now. It's finally happening in May 2022. So, Ruchit, tell us, HDFC Life specifically, it delivered its numbers earlier this week. I think largely it was better than expected set of numbers. But the stock has been quiet. Tell us, what do you foresee?
So we are still witnessing a lot of low bottom structure on the weekly charts. In fact, if you look at some historical data, then I think the time when LIC's IPO was announced that government would come with the IPO of LIC, since that time itself we have seen the HDFC prices of HDFC Life being in a corrective phase. And it doesn't seem that the correction is over yet. Maybe the recent close of around 510, 500 could be tested, where a double bottom if gets formed, then that should lead to the next leg of a move. So wait for some more declines towards 510 to 500. You can start buying the stock if you get it at that rate.
Okay. All right. Makes sense. Moving on to the next query, Shreyash Patil has written to us and wants to know your view on Titan. Is this a counter that you like? I mean, FMCG, of course, we've discussed in detail the various names, but what about discretionary plays like a Titan? Likely to do well?
Yes, relatively we can see some strength in Titan. Last few days it's more been a time-wise correction or a consolidation phase for the stock, and the stock has formed a good support around that 2450, 2470 range. So need to see whether it holds above that level of 2450. Till it is above that, the short-term trend still remains positive. And in case if the stock breaks that 2450, then I think some price-wise correction could be expected. But for now, if you have existing long positions, you can continue to hold on with the stop loss below 2450.
Okay, all right, makes sense. One stock that we don't discuss very often is MRPL. And if we look at the pattern on the stock as well, last 6 months, 58% gain. So a very quiet and a very solid mover it has been. And the next query coming in is from Danish Iqbal, and he wants to know about buying MRPL at the current level. Right now it's perched at 64.5 rupees. Good time to invest, or should he wait for some correction, some cool off to come by?
The one thing is that this is very volatile stock. Of course, if you are looking to buy the stock, first of all, you should be prepared for higher volatility in the stock. Now, if I look at last few days itself, the stock started moving higher when it was around 40 levels. Within no time, it's from 40, it rallied up to 72 rupees, which is a very decent gains in very short term period. And from 72, it has corrected towards 64, 63 again till yesterday. So I think the high top, high bottom structure certainly remains. But the volatility would be there, and within such volatility, you should always look to buy the stock in the panic stage or when the stock comes near the support ends. Now, the major support for the stock is placed around 58 to 60 range. Of course, it's a bit down from current levels, but I think that's where the risk reward ratio would turn favorable if you want to buy this stock. So now I would recommend to wait for some declines towards that 60 mark. So maybe 58 to 60 should be ideally a good range to buy this stock.
Okay, all right. Cool. Let's move on to the next query. Two of our viewers, Devang and Nishit Kapoor, both are asking us on IEX. It's been largely range bound, whether you look at the trend of last 6 months, last 1 year odd. What do you suggest on buying IEX at the current level? Will it continue this sluggishness, or will it finally break out of it?
So this definitely seems to be a corrective phase within an uptrend. There is no change in the trend, but in last 6 months, the stock has done nothing. If you look at the price-wise trend, but if you are a long-term investor, you can hold it for next 6 to 8 months. Then I think one should look for buying opportunities around supports whenever stock corrects within an uptrend. So 200 is a good support for the stock. If the stock corrects towards that 200 mark, maybe next 1 or 2 weeks, then you can look to buy this stock, but at least give a 6 months perspective, then I think you should get decent returns at the higher side.
Okay, all right. Okay, we have time for one and only one query. So we'll just quickly address from Sameer Sarkar. He wants to know about Godrej Consumer. Again, like most FMCG players, it has been quiet, but if you look at the last maybe 1 month, it's done well, 15% higher for that one. 790 is where right now it's perched at. What is your suggestion on this one?
So there's a falling trend line which is there on the stock, and that is resisting the stock to go up, and that is the trend line is now placed around 820. So unless you see the stock surpassing that 820 mark, you should not expect any significant up move. The pullbacks at high levels are getting sold into. So I would wait for a breakout above 820 to if you're looking to buy fresh. And in case if you are holding existing positions, then I think you should keep a stop loss below 750, which is the recent swing low. So whichever levels break first, whether 750 or 820, that would decide the next directional move. So existing position should be held with stop loss below that 720, and fresh buying can be done above 850.
Okay, all right. So before we let you go and before we wrap up the show, Ruchit, I would like to ask you for your 3 stock ideas. And from what I can tell, there are 2 sell calls and 1 buy. Why is that, and what are these stocks?
Yeah, so primarily there are 2 sell calls because the market is looking a bit weak. If you look at the structure, then the low top, low bottom structure on the daily and the hourly charts are there. And that's why I think we are looking for more of a sell calls. Of course, 16,825 would be the crucial level today. In case if that reaches, then there could be a lot of long liquidation coming in. My first sell call will be in Axis Bank, where we have seen fresh short formations yesterday. The stock has recently seen a decent up move, but yesterday, if you look, then we could see some price correction, which was supported by rise in open interest in derivative segment. So there are short formations in the Axis Bank. We expect the stock to correct maybe next 2 to 3 trading sessions. The stock could do 720. So go short on Axis Bank. Maybe even if you get it around 717, gap down today, go short over there. Keep a stop loss above 779 for target of 720. Manappuram would be my second sell call, which has seen underperformance recently as well. The stock has no strength. The pullbacks are getting sold into. So one can go short on Manappuram around current levels, keeping stop above 121. Expecting targets around 108 in the short term, and one contra call would be in Power Grid. Well, this has been one space which has witnessed a lot of buying interest recently, and the Power Grid stock also, if you look at the price up moves, there are good volumes, and on correction the volumes are quite less. So I think this over a period of time, next 1 to 2 months, this stock should show good returns from current levels as well. So one can go long around 227, 228 today on declines, keeping a stop loss below 220 and expect targets around 216 next 1 to 1.5 months.
Okay, point taken, Ruchit. Thank you so much once again for joining us, for talking to our viewers and telling them what to do with their host of queries. I'm sure they're taking back a lot from today's conversation. Thanks for joining in, and thank you guys for tuning in. Stay tuned to Money Control, because Markets with Santo and CJ comes up right after the show.